Hey guys, what's up? So today I want to talk about the volatility index. Now, this is something which everyone probably knows it exists, but very few people who've gone into technical analysis know how to use the information which is conveyed by the VIX. Today, my goal is very simple. I want to tell you two concepts which can be used by you guys when you are looking at the VIX, and it can give you a mathematical edge to your trading. It's as simple as that. The first concept is how can you calculate what could be the daily movement projections, what could be the monthly projections of how much movement can take place in your asset based on the VIX. And the second use, which I feel is very important, is how can you re-enter a trend? If a trend is in place, how can you re-enter that trend after a pullback or a throwback using the values of VIX? So let me give you a little bit background of what VIX is, its calculation, and why VIX goes up, why VIX goes down. Some basics, its and bits. And then I will, in this video, I want to talk about the daily calculations and the monthly calculations. In the next video, I'll talk about the entry aspect, the second aspect I talked about. So first of all, if I can give you a theoretical answer to this, the volatility index, I'm using the S&P 500 example so that it's a more broad-based videos. Depending on where you're watching it from, you'll understand what it is. Volatility index is the 30-day implied volatility as priced in by the S&P 500 options. Okay? If you want to get into the detail of what is volatility index ka actual calculation, you can go to Google and write white paper on VIX and you get that formula. But trust me, if you don't have a mathematical or an engineering background, there's no point for you to look into that. And it's not really required also. But you need to understand what it is telling you. Most of the people know, for example, VIX is 13, okay, volatility index is low. If VIX is 25, 30, then VIX volatility is high. You understand what that means, but how do you use that information? And what is really 13 VIX conveying you? If I ask you right now, can you tell me what 13 VIX conveys? Very few people can accurately tell me what that is. So does 13 VIX mean a movement of 13% will happen on the S&P 500 index in a week, in a month, in a year? What it actually means? As per the definition, the 13 on the S&P 500 VIX is telling you that an annualized move of 13% will take place in the next 30 days. Confusing, hai na? That is the reason I'm doing this video. So if you think it means something else, then you are mistaken. So what is how is VIX calculated? उस पे आते हैं. I told you it's the 30-day implied volatility. Now, implied volatility is an entirely different concept. I don't want to get into that because that's not the focus of this video. 30-day implied volatility as priced in by the S&P 500 options. Which options am I using? I am using the at the money and out the money options to calculate my value of VIX. What at the money, out the money options am I using? I'm using those at the money and those out the money options that have at least 8 days to expiration. And I'm using the next two expiries ke at the money and out the money options. I hope you are able to follow with me slowly. Listen to this again. And why am I using options which are having at least 8 days to expiration? The reason is I am not using an options that are expiring tomorrow or day after because of I want to avoid the end of contract volatility. That can be very large. So because I want to avoid that volatility, I'm using at the money, out the money options for my VIX calculation. I am using the next two expiries, but having at least 8 days to expiration. The second thing is what am I using? I'm using मतलब options क्या price use कर रहा हूँ? I'm not using the closing price of the options, for example. What we are using as per the white paper on VIX is we are using the bid and ask spread का midpoint. जो bids है and ask है, जो spread है उसका जो midpoint है, that is what I'm using in my calculation. So again, these are very theoretical numbers. I just wanted to give you a background for people who want to get deeper into this concept. But now, if I can go a little bit ahead, one question that I want to answer is why does VIX go up? Why does VIX go down? I told you in the starting that volatility index is 30-day implied volatility. What you need to understand is that when we look at the options के different factors which are determining the price of the option. So many things determine the price of the option. So for example, interest rates, dividend, what's the underlying price of the security, the time to expiration, strike price, the Greeks, for example, etc. But there is one factor, one pricing element of the options which keeps on changing, and that is called implied volatility. And this implied volatility part of the option pricing can keep on changing while all the other factors can remain the same. For example, your interest rate could remain the same, dividend could remain the same, you have the same strike price, time to expiration is the same right now. But because IV will keep on changing, the pricing of the options will keep on changing. You have to understand IV है जो option का या implied volatility है जो option का, that is very much dependent upon the order flow. When I say order flow, this means the demand and supply of the option. You have to understand this part if you want to understand VIX. बाकी सब भूल जाओ चलेगा. अभी तक I have talked very theoretical about what volatility index is because it is a very difficult concept to talk about. But understand this, demand and supply, or the buying and the selling of the options, the nature of the order flow, that is what is determining the implied volatility of the option. And that is what will eventually determine the VIX, because VIX is nothing but the 30-day implied volatility. What we need to understand is when forget all of this. Let us say price है. If there is more demand for a stock than less and less supply, तो क्या हो जाएगा? Price बढ़ जाएगा. Same is the concept over here. If there is net buying of the options taking place, that will mean the implied volatility will go higher of the options. If there is net selling of the options, that will mean the implied volatility will go down. As simple as that. And because of that, VIX will go up, VIX will go down. If the implied volatility is going up, VIX will go up. If the IV is going down, VIX will go down. ये एक basic सा concept है. If I can just give you a very simple example, let us say an earnings report is going to come out of Amazon, of let's say Reliance. I'll talk about in the Indian market, or let's say Amazon है. The earnings report is going to come out tomorrow. So होगा क्या? Because the earning report tomorrow जो release होगा quarterly earnings, that could contain some very significant announcements, some significant guidance could be there about Amazon for the next couple of months. You could have significant business prospects or commentary of the management being discovered is very important to the stock. Because of that, speculation will start in the option market, and there will be increase in the buying of the option. When I say buying, it could mean buying of call option, buying of put option. That is okay. As long as there is more buying of call or put options than the selling of call and put options, this will lead to the increase in the implied volatility. If there is more selling of the options, this will lead to the decrease of IV. But जो एक report कल release हो रहा है, because people are speculating what can happen, there will be an increase in the demand of put option or call option, and that because of that the IV goes up and the VIX will go up. ये एक basic आपका concept है. A lot of people get confused, or they ask me that, Devang, why does the VIX go up when the market falls down? What is the concept there? A lot of people have mugged it up that volatility index is a fear index and it goes up only because when the market is fearful. Why is that the case? If I can give you an example now with what we have learned so far in this video, it's very simple. What I have discussed with you is because of the nature of the order flow, the buying and selling of the options, that is what will lead to the IV, and that will determine the VIX. Now, think about a scenario. Now, let us say the market is going up. Please think practically, close your eyes and think about it. If the market is going up, or let us say आपकी market में breakout आ जाता है. If a breakout is happening in the market, do you think everyone hops on and buys that breakout? No, the answer is no. Some people will take advantage of that who are anticipating that breakout. The other people, they will say, yeah, let me wait for some confirmation. Let me wait for some retest. Are you understanding what I'm saying? Whenever there is an up move in the market, when the market is going up, prices are rising, there is not such a big surge in the buying of call options as there is in the selling of call options. मतलब अगर call options इतना ज्यादा नहीं बढ़ रहा बाइंग कि वो सेलिंग के मतलब ऐसा नहीं हो रहा कि एवरीवन इज सेइंग मुझे कॉल खरीदना है. सम पीपल आर सेइंग ओके बाय द कॉल, others are selling call, they are saying okay let us wait, let us see some confirmation, so there is no surge. So buying of call options is not like 3, 4, 5 times than the selling of the call options. So because of that, when the market is going up, the IV really doesn't shoot up. And if the IV doesn't really shoot up, your VIX will not go up, because VIX is nothing but the 30-day implied volatility. Same thing, imagine, very recently the budget ka announcement, sorry, budget elections results came out. Your exit poll results came out in India. You saw what happened before that. Before these announcements, your volatility index went all the way from 13, 14 levels to 30 levels. Why did that happen? Because speculation tha. And when the market started to fall, VIX kept on going up, 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 up. Why? Because when the market is falling, there is a panic-like demand for put options. When there is a panic-like demand for put options, this is much more than the selling of the put options. But this will be like 3, 4, 5 times of buying of put options hoga than the selling. Because जब market गिरता है, everyone is like, for this time निकल जाओ, फर्क नहीं पड़ता, at least for the time being, because our future is uncertain. Let's get out right now, and then later we will again evaluate the situation. This is not the case when the market is going up. I hope you understand what I'm saying. So when the market is falling down, people become so anxious, they become so fearful that there is a very big demand for put options or buying of put options, which is much more than the selling of put options. And that is why your volatility index, which is the implied volatility, goes higher immediately when the market falls down. I hope you're understanding what I have tried to explain. I might not have been able to do justice. Let me know in the comments if it is still very confusing. If you are interested in this concept, just read more about it. My goal is to try to simplify, give you an idea of what this concept is. But of course, there is much more involved in this concept. There is one very interesting concept called put call parity, or which is a very interesting strategy for arbitrage, or in other words, riskless profit. If you're interested in that, let me know in the comments, and maybe I'll make a video about that and it can benefit all of you guys. So now that we've understood what is VIX, what is kind of VIX, why VIX goes up, why VIX goes down, what is buying of call option, put option, everything. Now I can move to the concept I want to teach you. And this is that आपके सामने VIX 13 है. Just one second. Now you guys should be, I'm very sorry, मैं एक बार दोबारा कुछ एक चीज रिवाइज करना चाहता हूँ. Now you must be very clear that, for example, when the market is falling down, and I hope now you understand this concept. Now you should be very clear about this, that when the market is falling down, you know for a fact VIX needs to go higher. But if market is falling down and VIX is also falling down, what does this tell you? That there is a not a panic-like demand for put options. So maybe this fall is going to get bought into very soon. Maybe this fall, if you are short into this fall, maybe you want to trail very quickly and exit. This is a very important strategy that you need to remember. Please remember. If the market is falling down and your VIX is going higher, okay, you can hold on to your shorts, no problem. But if the market is falling down and the VIX is also falling down, there is still not increase in the implied volatility. There is still not increase in demand of put options. So you might not want to sit in the shorts for a long period of time. Trail quickly, get out quickly at fixed targets. That should be your strategy. Okay, hopefully it is clear. Now, second thing, what does this 13 value indicate, right? The 13 value, or whatever value, if I can go to, let's say, an Indian market and show you that India mein VIX right now is trading at also 13 coincidentally. So this 13 value of VIX, or 32, which happened at the election time, this is telling you that a movement or annualized movement, please understand, volatility index का जो number है या implied volatility का, when you look at the stocks, आप options देखते हैं, and if the option has a 25% implied volatility, that does not mean 25% move will happen in this month. It is an annualized move. These are annualized measures. I hope you understand. So अगर ये 13% is an annualized figure, how do I know what movement can take place in a month, or what movement can take place in a day? Please understand, implied volatility and volatility index will not tell you the direction of the movement. They will not tell you that. If VIX is 13%, that does not say upside movement come or downside movement come. It will just give you on either of the side, itna volatility can happen. It is giving you a good degree of confidence. It is giving you a with how much confidence or with as per one standard deviation, for example, this much movement can take place. Not what direction, but okay, this much move can take place. So 13% VIX का कोई मतलब नहीं है. This is basically telling you in a way that in the next 30 days आपका 13% का annualized move आएगा. If you want to know what is the 1 month का expected movement, then the formula is very simple. The formula is whatever is the value of VIX divided by, please remember this, square root of 12. This is the formula of one month calculation. कि 1 month में कितना movement आएगा. So the square root of 12 is 3.46. You can use your calculators. So if my number is 13 right now, 13 divided by 3.46. So approximately 3.5% if my maths is right. That is an expected movement that can take place either on the upside or on the downside of Nifty. Now, this is very, very important information. Now, you might ask me, iska kya use hai? I'll explain. Hold your horses. If I want to calculate 1 day movement, why? Because let us say tomorrow is expiry. Example de raha hu. Tomorrow is the expiry. You want to do an option selling trade or an option buying trade just for because tomorrow expiry option will become zero. So if you want to know based on the VIX how much movement can take place tomorrow, the formula is very simple. The value of VIX divided by the square root of 252 because 252 trading days are there in an year approximately. So this is basically 15.87. तो अगर आप डिवाइड करोगे 13 divided by 15.87, this will be less than 1%. So मतलब tomorrow less than 1% movement can take place in the index. I will just repeat this so that you are clear. If you want a 1 month projection, upside or downside, how much movement can take place, the formula is volatility index divided by 3.46, which is the square root of 12. But if you want a 1 day expected movement, upside or downside, then it is volatility index divided by square root of 252, which is 15.87, or you can say 16. So if, for example, the volatility index is 16, that means 1% move daily will take place. But if it is less than that, then less than 1% movement will take place. So uses इसके बहुत ज़्यादा है. So one use is, for example, if you're an option seller, very, very important use of that. If you know that in an index a 0.80% move will take place because of what VIX is right now, then you can do कि आप 0.80% नीचे and 0.80% ऊपर than the current value, you can sell options. You can sell a put, you can sell a call. You don't need to know what the market is doing, but if you know that 90% of the time that's going to happen, and eventually if this goes wrong, you can always adjust your trades. But to start it or to hold, let's say something overnight, you can do that. Ki 1% niche, 1% upar, I'll sell an option. At the same time, if you're an option buyer, then you know कि for example, अगर अभी मेरा market, let us say अभी Nifty is where it is right now. Nifty is at 23,500 right now, and you know that Nifty का maximum movement as per the VIX is 1%. So 1% is about 200 points. So you know maximum by tomorrow अगर expiry है, so you can get a movement till 23,700 on the upside. So there will be no point buying an option of 23,800. I hope you are understanding. So you might want to buy an option which is going to mean profit based on these calculations. If you are buying a 23,900 option, just speculating ki movement aayega, maybe I'll make money. That will not make you money because VIX is telling you, I am not going to give you that movement. But however, when the VIX goes to 32, this means that every day 2% movement can take place. Then in that case, buying a far OTM option might be a benefit to you because that can become in the money. There is a big probability to become in the money. I hope you're understanding what I'm trying to tell you. So these calculations will give you an expected range of the market. Number one. Number two, if you're an option buyer, you know what OTM options you don't have to buy or when you have to buy OTM options when the VIX is high. I hope you understand this perspective. Another example is something that I have tried and I also have a video on this. when I had my YouTube membership many years ago. And I remember this concept he मैंने जब किया था, try it out. For example, right now market is at 23,500 and the VIX का formula is telling me that approximately a 0.80% movement can come. So let us say, for example, that is 200 rupees. So as per the VIX calculation, 90% of the time 200 point ऊपर या 200 point नीचे का move आएगा. Now let us say a movement happens on the upside and you come to 23,700. And let us say at this level, some kind of a bearish formation is there. Let's say a shooting star happens, yeah, some double top happens. Now you are getting a double confirmation. Not only a pattern is being formed, but also at the same time you are getting expected range के ऊपर आपको reversal मिल रहा है. So you are getting a double confirmation. You can also use that as a target basically, and a reversal or a stop loss can also be used. Think about what I've discussed. Maybe it is new for some people, maybe some people know it, but I hope you found it useful. If you want me to discuss more strategies on VIX, because they are very useful and still people don't know how to use them, let me know in the comments and I'll try to make a video very soon on that concept also. Cheers, guys. Thank you very much for listening. I'll see you soon.